All right, sorry about that. Seems we had a couple technical issues. So today we're talking about the merge, the splurge. Don't miss out. Let me know if you guys can hear me. Drop it in the comments. Should all be good. Um, the merge. What do we need to know? So I'll be talking about the merge today on this live stream. I'll be covering some on-chain analysis of what went down, how people behaved. We'll be tracking the movement, what people have been doing, what has happened, token flows, so on. And what's next? What's next for Ethereum? What should you expect? What's going to happen? So let's start breaking this down and get right to it. So the merge is complete. The merge completed. Here's what's next. So Cointelegraph has a pretty decent article here. They do quote Vitalik's tweet, which is pretty old. It's back from December, but he tweeted essentially the roadmap for Ethereum with the merge and what comes next. So let's break this roadmap down real quick. First, you got the merge, where you transition from proof of work to proof of stake. That is now complete. It was completed on the 15th in the morning, UTC, depending on where you are in the world, but September 15th is officially the merge day. Next step in the Ethereum evolution will be the surge. The surge is kind of massive scalability, roll-ups, sharding. It's the next step for um, improvements, especially for scalability, costs, all of that stuff. So that is what everyone is kind of waiting for in terms of making Ethereum fast and cheap. That would be the surge in the next step. Next, you got the Verge, which is stateless through vertical trees and related features. So in order to understand the Verge a little bit more, let's jump over here. So the Surge. So um, the Surge is what we mentioned. You're implementing sharding, kind of next step in scalability. And finally, a splurge and the purge. So the last three steps are kind of ongoing development. And it has to do with the roadmap. It's mostly to make Ethereum more efficient. Vertical trees will provide much more efficient proof size. So it's kind of like making Ethereum more efficient. So once you have scalability, how can you make those blocks faster? So it's very technical stuff in terms of the purge and the splurge. The verge and the purge. The purge is going to consist a little more on getting rid of unnecessary data. So the purge will involve removing spare historical data in an effort to alleviate network congestion by purging superfluous data. So what does that mean? If you have a bunch of old data from the merge, or not even from the merge, just from Ethereum that it has all the old transactions from everyone using it. You gotta get rid of it at some point. So that is what the purge is. That way, you're not holding to these old bytes of data that are just kind of sitting there taking up space. So, and finally, the splurge. The splurge is what Vitalik just likes the most because he says it's the fun stuff. They can just focus on miscellaneous but important extras. So anything to improve Ethereum kind of once the rest of the stuff is complete. Now, even though this is a roadmap, it doesn't have to be sequential. It doesn't mean that the surge is exclusively before the verge and so on. A lot of these things are being worked on sequentially. But really the next step is the surge and scalability. So massive scalability increases in terms of the Ethereum roadmap on what is next. So we can actually go over here on ethereum.org, upgrading Ethereum to radical new heights. So the vision, more scalable, more secure, and more sustainable. So with the merge that completed 24 hours ago, no more, it's been almost 2 days. Ethereum cut their electricity emissions by 98%, 95%. And they cut total world electricity consumption by 0.2%, which is pretty cool. And miners are now effectively phased out, so gamers can, one, stop complaining about Ethereum using electricity, and two, they can be happy to get cheap GPUs entering the market. So that's going to be an interesting step moving forward. So you can actually go over here on ethereum.org and dive into the vision. You got the beacon chain, the merge that was live, and now it's sharding, which would be the next step between 2023 and 2024. Sharding essentially splits transaction consensus. So if you're just doing a swap, it would shard it to a section where it's sharding is happening, so you don't have to spread it to the whole network. It's a way to scale Ethereum in transactions because you're not confirming them with absolutely every computer or every validator or everyone running a node on the network. So if before you thought it was called Ethereum 2, that's actually changed past the merge. They've kind of evolved that roadmap. Now it's Ethereum Serenity. So that's kind of a misconception, now evolution of what's next on Ethereum. But let's break down what the merge actually means and what's coming. So Mesky did a pretty nice breakdown. Mesky is part of the core team at Playtest DAO, a pretty cool project on Arbitrum. If you haven't seen my video on Arbitrum, I've also written a thread. Do check that out. So I talk about Playtest. It's a pretty cool project, wanting to kind of take over governance in Arbitrum, a layer 2 solution for Ethereum. So what is happening for the merge? The merge is proof of work to proof of stake. The ESG narrative is now on because Ethereum is now environmentally conscious or whatever. ESG, we can go down a whole rabbit hole on ESG, but it is in the proper narrative now. So they are reducing 95% of their electricity. So that's a good step forward. But in terms of structure and what is next, it's pretty interesting because the most important part is the issuance. So before the merge, daily, you would have around 15K tokens that were issued to miners for securing the network. So by most estimates, miners would just sell those like around 85% of their tokens every day, which is right around $20 million of sell pressure that they would have daily on Ethereum, because miners would quickly take profits and move on, essentially. So with cutting this on proof of stake, the issuance is reduced by 70% from 15K to 4K or so. And that is why it's actually called a triple halving. So like when Bitcoin has a halving every 4 years, issuance to miners drops by half. But here you're going to have a 70% or a triple halving, where issuance dropped from 15 to 4K. So that's a pretty big step. So let's kind of continue on what happens next. So since the issuance dropped so hard, Ethereum can almost become deflationary. So if we go to ultrasound.money, we can actually see how Ethereum has been behaving. Seems Ethereum has been inflationary since because usage on the network has been relatively low. But it does become inflationary. So if we simulate proof of work over here, we would have seen there would have been almost 20K Ethereum issued, but with proof of stake, there's only been 400 Ethereum issued so far. Now, we also have to consider a lot of this Ethereum is actually locked until the Shanghai upgrade because proof of stake tokens are completely locked until then. So let's kind of continue breaking this down because it is quite interesting. So Ethereum is relatively stable, supply and demand match, but here's a scenario. Because there isn't 20% sellers, the price will not move up. Everyone, or not everyone, some people expected maybe the price to shoot up, but really this narrative is a long-term narrative as people start to understand that Ethereum is either inflating much slower or becoming completely deflationary. So it's also a great way to earn yield by staking Ethereum. And we can go down that hole. We can actually look at Rocket Pool and how you can stake Ethereum through Rocket Pool. This is a way to kind of decentralize the network a bit more. Most people are staking with Lido Finance, and they're the biggest stakers. So I would highly recommend using something like Rocket Pool, which offers you more decentralized or helps you decentralize the network. So you can stake and run your own node, or you can simply stake Ethereum. Right now, earning right around 4%, or if you run your own node, you get a bit more, right around 5%, because you're getting RPL token rewards. So this is great. You actually get RETH, Rocket Pool ETH, if you stake your Ethereum. So if anyone wants, they can just go to rocketpool.net and you go right here to stake. You go to staking page. It's pretty straightforward. You lock your Ethereum. Now you do have to remember your Ethereum is locked until the Shanghai upgrade. When is the Shanghai upgrade? Within the next year. So that's kind of the idea of Shanghai. They're not exactly sure. They've tried to batch upgrades together. So the Shanghai upgrade should come. It could be anywhere between 6 months and a year for that upgrade. So that's kind of what's next and kind of why people might want to earn. Now, you also have to consider that with Ethereum staking, and because everything is locked for a year, a lot of these rewards that we can actually see on Ultrasound Money, all of this inflationary Ethereum that is being giving out as rewards is essentially locked. So a lot of these people that might want to, unlike miners that had huge costs to run these rigs, pay electricity, and so on, staking Ethereum is relatively low cost. So there's no reason to want to instantly dump your Ethereum. Because there's no running cost that you have, except for some of the bigger validators and so on, but the costs are cut quite a lot. And of course, since it is locked, it is essentially flat in terms of circulating supply until the Shanghai upgrade. So that's going to be an interesting thing to track, and one of those slow catching effects that people don't really grasp until later. So let's keep going on supply growth and how it's expected to go on. So right now, because of gas, Ethereum is inflationary by 0.19%. So it went from right around 4 to 5% inflationary to right around 0.16, 0.19. If we actually simulate proof of work over here, we can see inflation used to be right around 4% because of the EIP 559 upgrade, which burned a lot of the base gas fees. And you can see the issuance was right around almost 500K, or whoa, that's a big number of Ethereum, but issuance has gone down quite a bit, which is why inflation has gone down so much. Now, you do have to consider GUI has been relatively low, as in there's been low usage in the market. If GUI went past 20, so anytime Ethereum gas fees are above 20, Ethereum effectively becomes deflationary. So we can see kind of the base fees here. It has to be above this rate number. So it's actually 15 GUI for it to become deflationary. Right now it's right around 13. So we can see Ethereum has had its jumps above when it's around 20, when it's around 30, and so on. But anytime it's below, it is inflationary, but we can also see it's very small inflation what it has. And we can kind of track the project supply and the expected kind of outcome. It's expected that in the long term, Ethereum will find a bit of an equilibrium, or a bit of a just a peace number, where it's going to settle at right around 41 million Ethereum. And that's where it's kind of going to be relaxing in terms of max staking. So when people are totally staked, it will be a little more inflationary. The more people at stake, the more rewards that have to go out. So currently there's right around 13 million ETH, almost 14 million staked. They think long term there might be around 41 million ETH. So that ups the total rewards that go out, but with that amount of staked ETH, likely there's going to be more usage on the network as well. So we can kind of see the supply growth, proof of work removal, and they're kind of expecting it to either go flat or start deflating on the long run in terms of Ethereum. So we can kind of play with these and how the burn would work, how it goes, and so on. So this is burn tracking Ethereum burning. So you can actually track which ones, which apps are the biggest burners right now. We can see OpenSea and Uniswap are usually in the top two in terms of gas burning, and Ethereum transfer seems to be the highest one right now. So yeah, this is kind of the average of Ethereum burnt. We can see 1,000 Ethereum has been burnt in the past day, and so on. So that if you want to understand ultrasound money or how Ethereum is working now, this is a great page where you can track all of those metrics, and really dive into that. So let's dive into on-chain and see what happened during, after, and before the merge. So we got Nansen loaded up here because exchange flows really popped the day of the merge. Right before the merge, we had this huge inflow right around almost a million ETH, which is just huge number of ETH being deposited on exchanges. And then the next day, we actually had a withdrawal right around 200,000 outgoing ETH. And then we had, it looks like we have another deposit of ETH. But we can actually track and see exactly who made these ginormous withdrawals because people were freaking out saying, oh, someone's going to dump all their ETH, it's going to go to zero, so on. But it was actually, looks like it was Nexo. Nexo was depositing, looks like they did 2 transactions of 450,000 ETH onto Ethereum. And they deposited all of this ETH, likely because they're trying to get the Ethereum proof of work fork tokens. So they deposited those ETH, they were going to farm those tokens. And because they haven't announced they are respecting the token or the fork or so on for any depositors, likely Nexo is trying to make some extra money by getting all of the forked tokens, selling the forked tokens, and then they get a quick 2% trade by simply moving their Ethereum around. So that is likely what is happening, in my opinion. We can hop over to Glassnode and see kind of the inflow of ETH. A lot of people were freaking out. Oh, so much ETH being deposited on exchanges. It's the end. But we can actually see it's a blip in the radar in terms of net position change for exchanges. We've had bigger spikes. We had a bigger spike in June, and that was a consistent spike, multiple days of Ethereum being deposited on exchanges, whereas the other day it seems so far restricted to 3 days of high deposits, but we can actually see there is much higher deposits in July and so on. So I'm going to be continue tracking this, see how the price develops around these deposits, and see if we start turning negative again, people start withdrawing their ETH again. So definitely worth kind of keeping an eye on all of this. We also want to check out the funding rates because as we know, there was a lot of shorts that were open going into the merge. So funding rates had gone very negative. On Ethereum, we can actually see funding rates are starting to go flat, means most of the shorts are closed or closing. That is, most of the leverage is getting flushed out. Most of the positions going into the merge that were hedged, likely short perps, long spot, or holding spot, are being wounded down, and they're winding down out of the merge. So that's kind of the next step on what most traders had been doing or have been doing. We can see that liquidations have been relatively high lately because of the relative volatility, most liquidations being on ETH at the moment. And this is what is kind of happening on chain right now. So let's hop back onto Glassnode, see what else we can find on ETH, because there is definitely some interesting things happening. In terms of dormancy, I wanted to track this one because I want to see how many older tokens were moved going into the merge. And we can see there wasn't really old tokens moved going in. So the oldest recent top was around dormancy of 250, which isn't completely the worst. Uh, it's pretty average in general, actually. It is a little high, but really going into the merge, we didn't have any big movements. This spike over here is actually the Ethereum Foundation selling the top, and they have a tendency to sell perfect tops. So kudos to them. They actually sold over here as well. So Ethereum Foundation, if they ever sell, that's your notice. You have been put on notice that that is the time to sell the top. Um, Exchange net flow and position change. So we just saw the net flow. We can actually see it's really a blip in the radar in terms of exchanges and how much goes in and out of exchanges. It's an average relative day. It's a high day, of course, but it's a high average day. It's not anything that hasn't been seen before. Net position change, exchange flow, exchange balance is what I wanted to see. We can see that little spike, but that spike really reached February lows or February highs, really. But around then, there really hasn't been much else in terms of that exchange balance. So, considering how this exchange balance has been going down since 2020, we have not even reached, the levels of 2021. It's the highest we went right now is March 2022 levels. But it's going to be important to track this as typically we do see a bit of correlation starting in early stages of a bear market that lead into a bull market as exchange flows start to go up. People start depositing on exchanges as the price moves sideways right before we start that big rally into a bull market. So it's going to be interesting to track how on-chain develops with that. Supply and smart contracts is an interesting one because we can kind of see how much Ethereum was locked up before and over the summer. And going into the merge, a lot of people were scared there would be issues. So there was a lot of supply that was unlocked going into the merge. We can see the hop going from almost 27% of the supply to going down to 25. So good 2-3% was unlocked and moved out of smart contracts because people were genuinely scared of what might happen for the merge. Finally, I do want to cover HODL waves because HODL waves tell us how old the coins are and how long people have been holding. Gives us a good idea of market behavior and whether or not you got the very old people selling, very new people cycling in, and so on. So we can actually see the 2017 top with HODL waves quite well. We can see there's a bit of kind of new tokens, new holders coming in, and the top shrinks. This is a lot better visualized on Bitcoin because we can see kind of the old holders growing, but we can also see this on Bitcoin, on Ethereum, sorry, as older coins grow. We can see some less in this range, the 2 to 3 year range. A lot of people sold around December, and then a lot of other people have started to buy since May, which is interesting. So there's a lot of newer holders, 1 month, 3 months, so on, that have been starting to grow because a lot of people seem to have bought right around this early part of the year, January, February, and then from that, it's been 2-3 months, and those supplies are growing and maturing into older holdings. So it's going to be interesting to continue to track this and see how this develops. If people are starting to hold a little longer, and if we're starting to get some more of the newer token holders, we want to see these 2-week, 1-month bands start to expand as newer people start to enter. That's usually what we want to see for a bull market. Finally, mvrb z-score. It's a nice idea to see how close to our with the bottom. So far, it's been very accurate with Bitcoin, not quite as accurate with Ethereum. As you can see, it's spent a long time in this buy area. Though, to be fair, buying Ethereum right around, let's see, between $380, $200, was a great idea back in the day between 2018 and 2020. So right now, it would tell you that Ethereum is at a decent price whenever it's in this green zone. So Ethereum is back in that green zone. Anytime it's below 15K, 1500, sorry, it's Historically, a decent buy for the long run. Now, you do have to understand what your risk is, what your risk appetite is, and how you approach investing. Um, there's a question on security. Can you speak on security of the network? Vitalik has made it clear in the past that there will be new vulnerabilities with proof of stake, and 51% attacks can be made with 5% now. Yeah, Vitalik didn't say that. 51% attacks don't actually work on Ethereum proof of stake. You would need a 66% attack. So consensus on the voting layer is dependent on 66%. So I'll pull up the Ethereum staking right now to kind of get that breakdown. But it's not actually how it works. You need 66% in voting, and everyone has to essentially agree on that. But you can still get a minority that votes against them. And the minority would essentially cancel out the 66%, and they would have to backtrack and get slashed. So you can't actually have these 51% attacks with 5%. That doesn't really make any sense. You need a 66% attack. And the biggest issue with these attacks is that if there is a minority that votes against it and doesn't agree, there isn't consensus reached, they can be slashed. So you'd have all of these misbehaving participants get completely slashed, or they get slashed of around 50% of their stake. And if they lose so much of their stake, then they're going to be losing quite a bit of money. Not really worth it to go against consensus there. And it's literally impossible to go against consensus multiple times. If they go against consensus one, they lose half of their stake, and it gets redistributed among the rest of the validators. So you would need more money every time to attack. Now, proof of stake is essentially putting your money where your mouth is. The way it works is that because you're staked and you're securing the network with your money, essentially, you need all of that money in order to do these type of attacks. So the vulnerability would be if someone were to take more money than what is currently staked on Ethereum. So we can actually find that right around here. Okay, I don't have that right now. We can actually find it on Glassnode. But if you take more money than what is staked on Ethereum, then you can try to do these attacks. However, so here, staking deposits, we can actually see total staked. So we can actually see there's right around 12 million ETH staked, 10 million. And that is a lot of money. So you would need at least 66% of that amount of money in order to attack the network. So because of that, you can't actually attack Ethereum. You would just need a lot of money. And if the vote doesn't go your way, you would be slashed of half of that money. So the risk reward there is just not worth it. You had another question. Wasn't proof of work the original breakthrough in tech? Still bullish midterm, long term. So proof of work is a great consensus in terms of exchanging proof for electricity. That is essentially what proof of work is. With a different consensus on proof of stake, you are essentially exchanging your vote of confidence to that consensus. So it is different. They are both innovations in tech. Proof of stake came after proof of work because of how things worked. Proof of work has its flaws as well. Miners can do a 51% attack. Miners can also shut down. We actually saw miners misbehaving before the merge. So what miners were doing is they were cutting hash rate to prolong Ethereum as long as possible. So they were making the blocks slower, attempting to get as much Ethereum before it merged, if that makes sense. So miners can also misbehave. You can have huge mining pools that control big amounts of the network. So right now, the biggest complaint is how Lido owns so much right here. So we can see Lido owns quite a bit of the staking power. Then you got Coinbase in gray, you got Kraken up here in blue, and Binance in pink. So we can see that big exchanges control a lot of the staked supply. Lido is not an exchange, but they are relatively regulated, even though they are on chain. So you have to deal with these personalities or these groups, but you also have to deal with miners, and miners aren't always the most supportive. Miners have been working on the proof of work fork, so that fork will be coming soon. I'll be probably dropping some info on my Twitter about the fork, so don't miss out on that. Because you can claim your proof of work tokens and instantly sell them. So follow me on Twitter. I think Julian I am. I hope I answered everyone's questions. Happy I gave you an in-depth answer. So I've been sharing quite a bit of different information on what is happening, the merge, some other information on Arbitrum, on different projects. So definitely don't miss out. You guys can follow me there. Check out the Burb Nest. We share a lot of education. I've been sharing a lot of information going into the merge and around it. So if there are no last questions, do let me know if there are any last questions. I'm happy to answer any questions. Otherwise, check out the Discord. There's probably a discount link somewhere around here. Otherwise, just reach out. You can DM me. You can DM the Burb Nest or Burb for a discount code, or trial to check out the Discord. We share a lot of information there. Try to educate as much as possible so that people can continue to grow. So if that is all, thank you very much. I hope I was able to answer some comments and some questions that you all had on the merge. So take care, everyone, and I'll catch you on the next one. All right, peace.